So I think that gave the market hope that over the weekend, maybe some of these tariffs can be negotiated off, and you can see the effect on stocks. It was a sharp move. I mean, a lot of stocks moved on that news. Best Buy rallied a couple dollars. Anything in the retail sector got a little bump from that news, Nicole.
Yeah, I didn't really realize how much, when we saw that, for example, Lulu opened and was selling off, but now turns around, to your point, on this negotiation. Yeah. And that's the question. And Trump is out, and Howard Lutnick is out talking about things are working, sort of stay the course, and we're going to hit new highs, sort of don't worry about it, medium to long term. So I guess this is near-term pain. Thank you, Kevin Hanks. That's what they say. I don't know the answers. Thank you, Kevin Hanks. Great to see you. Let's take a look at the bigger picture. Melissa Armo's with us, founder, owner of the stock Swoosh. Look, this has not been easy for investors and traders, which, many of whom said to me this morning, I hope it sells off more. They're really looking for a big sell-off, lots of, bottoming, volatility, capitulation. What are you thinking, Melissa?
Well, I've been thinking that the market was going to sell off for quite some time. So a day like today was something that I was anticipating pretty much since February, once we didn't make brand new all-time highs, once we stopped that, and then Trump, of course, began to discuss tariffs. But there was something else your previous guest mentioned about rate cuts. I think the market has built in too many rate cuts for this year. I absolutely do not think we're going to see 5 or 4 or 3. We'll be lucky if we see 1 at this point. I think it's a 50-50 for me if they even lower rates at all this year. If they do, I definitely don't think it's going to be the next meeting, which could mean, again, more selling in the market. So we could see a period this summer, spring and summer. Again, earnings season is coming up, so a lot's going to depend on that too. But we're going to see a period here where I think there's going to be a lot of opportunity to short. Now, obviously, traders can short, but people that are invested in the market long term, people for the retirement accounts, you cannot short in a retirement account. You could buy a put if you know how to trade, but a lot of people just are invested and they want to see their portfolio continue to grow. And while it has grown over the last few years, we've been very bullish. That's not the case right now. So it's ridiculous that people are trying to pick a bottom. People were saying we were bottoming out a couple of weeks ago, and look where we are today.
Yeah, understood. I mean, and here's the thing is we're going into the weekend, some of the traders noting yesterday, look, if you're ending near the lows of the day, that's not a good sign for the bulls. And that's sort of shaping up to where we are now. I mean, we're not too far off the lows of the day. We're hovering and bouncing around here. We're down 3-4% on every single major average, with the S&P down 4.5% right now. Not a great sign for the bulls going into the weekend, right?
Exactly. And, Scott Bessent said something in an interview this week on Fox News. He said to countries, listen, don't come back and try to fight with us with reciprocal tariffs. And now look what happened with some of the countries today. China, for example. So again, don't think that this is going to be over in like a day or 2 days or even a week. And I think it's really going to be interesting to see how this shapes up, but it's definitely going to take time. Whether we close at the lows or bounce here into the close when shorts exit, I just don't see anything really that I want to buy in this market. I don't even see anything that I want to buy in my retirement account, and I'm young.
Oh, so you're not even interested in buying for the long term. That was going to be my question to you.
Why?
That
Why
maybe
would you
think
do
it's.
Yeah.
So you don't even think it's time to dollar cost average or get in for something that you can hold for, I don't know, 10 years or something. I mean, a year certainly doesn't seem like enough for you, right?
No, I mean, again, if you look at where we've gone from off the highs, and if you look at where we were even, 2 weeks ago, again, people keep saying we're extended, we're climactic. No, we could be lower. I said that yesterday, and look where we opened this morning in the gap. So again, the bottom line is that if you're looking to buy something in your retirement account, I'm not saying that the stocks like Apple, all these companies, these are fabulous companies, they're going to continue to rebound at some point. But do you really want to live through the pain in swing trades or your retirement account if you buy something here and it keeps dropping? What I found, again, I teach people how to trade the market. What I found with people is they have a very, very low tolerance for pain. It doesn't matter if it's a short-term trade or a long-term trade. Nobody wants to see red.
Look, I mean, there's no doubt we have this cratering effect. I mean, this is a fast quick sell-off that we're seeing in 2 days. The VIX really telling that story, being up nearly 40% today. So the question is, we're only, I'm not minimizing it because it's extremely painful. We're at 6-month lows. We're back, to where we were, the NASDAQ and S&P 6-month lows. We had 2 20% years. The question is, what happens next? Do we keep falling and falling and falling? I think 6-month lows people could probably handle if they had some clarity and maybe some volatility and bouncing back and all that. Maybe we can falter and bounce around after this, or is it just going to be these big days of selling like this?
No, it's very rare that we would go straight down forever and ever and ever and then bounce and then never look back. So again, the past 2 days that we've had of selling, I think what is so shocking for people, first of all, selling is always shocking for people. That's one of the reasons the stocks fall faster than they rally. Panic comes in and it creates uncertainty, and then people panic. People are panicking now that are actually up. So people are selling positions that they're in, that they're up, but they were up more yesterday, the day before, or a month ago. So some of the panic is people just wanting to take profits because, like you said, we've been very, very bullish. But again, it's very rare that something would go straight down. So again, yes, we could have a bounce in here. We could bounce for the next 2 weeks and then still drop another 20-30%. There's no telling what could happen now is what I'm saying, because so many charts. If I look at 50 charts today, all the things I love, none of them look good. So basically, if they don't look good, you're like, okay, well, Apple was a good buy at 200. Is it a good buy at 190? Yeah, but if it goes to 150, is that better? I mean, do you know what I'm saying? You kind of can talk yourself into anything at a certain point, because again, how much pain can you withstand in your account?
Look, a lot of the names are bouncing back. The retailers, we just did that segment with Lulu and Nike. I mean, I see Deckers, Nike, Lulu, Dollar Tree, Target, Lowe's, all with some up arrows between 1 and 6%. So that's some good news there. But really, every single sector is lower. And I spoke to Dan Ives from Wedbush earlier today, and he certainly didn't feel like there was opportunity coming, and for the Mag 7. In fact, he said the trade war is here, and that the stock market is not political, and it's telling you the story. And he felt that this whole thing could take tech back a decade. He said if you buy anything, you're going to have to hold it at least a year, etc. He really was pretty a little doom and gloom. What do you think of that?
Well, again, it is partly the tariff issue that's happening right now, where companies have to take a look. Are they going to invest in the United States of America? And there are some companies that are willing to do that. You already saw Apple's going to invest in the U.S., NVIDIA too. So some of these companies are going to invest in the U.S. markets. That's going to cost money, and that's going to be long term. But you also have, like I said, the market has been very jittery about rates going back. I think it was the beginning of 2023. Again, we had the Fed kept rates too low for too long, and then they bumped them up too fast, too quick. And so now I think, once again, they're going to probably make the wrong decision, where they're not going to lower rates, and they're going to take their time doing it because they don't want to act too quickly. So again, it's one of these things where it's the recession fears and it's inflation that's going to create the Fed not wanting to drop rates. So the market's worried about that too. The market built in too optimistically even rate cuts last year, and we only ended up having, I think, 2 last year, if I'm correct. So they thought we were going to have 5 last year, and we didn't even have the first one until September.
Right. So there's nothing that you want to nibble on. I mean, I got to let you go. I know you're busy too. Just nothing that you're going to buy today or even next week. Not right now.
I'm looking at things that I'm saying, might I want to go long this at some point? Tesla's one of those names. But again, I look at it today and I say, no, I can't. I just can't. And again, even though I'm really
Tesla.
done. Huh?
Maybe Tesla in the future.
Not here, not yet. But again, these stocks will come back. They will come back.
All right. Melissa Armo, great to speak with you, founder, owner of the stock Swoosh. Thank you so much. Great to see you, Melissa. Coming up, Options Corner, Tom White is standing by. He'll highlight unusual options activity from the day and how investors are looking to trade on recent news of Micron, Broadcom, Apple. Stay with us.